Hello everyone. You are welcome to the channel where you have a strong interest in investing in yourself. Is the Fed currently in favor of maintaining interest rates? The stock market will suffer due to their policy of currency manipulation. A massive, repulsive bubble. Do you find this alarming? Do you have any knowledge about this? When the market goes down, is it more profitable to earn more money than when it goes up? This video only provides a summary of the international financial situation over the past week. By calculating artificial intelligence like neuron, some real-time opinions can be summarized. The sole purpose of this material is to serve educational and financial analysis purposes. We don't provide direct investment advice for any market. The analysis is solely based on the latest transaction data, please take note. Does not reflect long-term market trends. When Hamas raided Israel, there were some experts who believed it. This occurrence is a repeat of the Middle East crisis. All indicate the possibility of fluctuations in the energy industry. But this channel is in storm geopolitics money. High interest rates imminent. Today's decreased oil dependence is highlighted in both films. This time is not the same as the previous time. Let's get started with the class video now. The previous episode of the video discussed the stock market. The focus of our attention is now on the industrial situation. This week, real estate in Europe and Hong Kong continue to perform strongly. The real estate market in these areas is showing signs of a bullish trend. Home buyers may be interested in homes with favorable loan interest rates and other favorable conditions. Investors may consider investing as a component of their investment portfolio. Real estate investment trust rights allocated to these regions. Using real estate funds as a way to mitigate volatility. Diversifying investments across a variety of commodities is a possible option for investors. Precious metals are considered assets that are safe and secure. Investors need safe haven assets. Market speculation about inflation exists. Silver and silver futures. Slightly higher gains than gold, which could indicate industrial demand alongside investment demand, since silver has uses in various industries. Given the positive movement in precious metals, investors might increase their allocation to gold and silver as a hedge against inflation or economic uncertainty. Rhodium, a significant increase, indicates strong market demand, possibly from the automotive sector for catalytic converters. The mixed performance in industrial metals warrants cautious investment, with potential focus on specific metals, like rhodium that shows strong growth. Copper and copper futures slight decline, which could signal upon tensions in industrial growth, or concerns over economic health, as copper is often seen as a gauge for global economic trends. Crude oils WTI and Brent. Modest increases could be due to geopolitical tensions, supply constraints, or recovery in global demand. Natural gas slight increase possibly driven by seasonal demand changes or supply issues. Live cattle futures. An increase here might reflect steady demand for beef. Lean hog futures. The decline could be due to market oversupply or reduced demand expectations. Soybean oil and soybean futures minor change, with soybean prices showing Gazmo decrease, which could relate to trade dynamics for crop yield forecasts. Wheat and corn futures. Declines in these grains could suggest expectations of good harvests or reduced demand. Sugar and cotton. A significant drop in sugar could suggest a surplus or reduced demand, while cotton shows a negligible decrease. Global economic health significantly impact commodity prices. Investors should stay informed on these fronts to make timely decisions. Volatility indices. VIX NAN. The market volatility is lower when VIX and VX default. The rise of VXN is indicating that tech-related stocks are on the rise. Volatility is expected to increase, and risk hedging can be achieved through the volatility index. Bond prices are prone to changes in interest rates. Long-term bonds tend to be more susceptible to changes in the market than short-term bonds. Yields have been falling based on bond market data from the past week. Usually, this signifies that the economic outlook should be more cautious or pessimistic. When the yield curve tends to lie flat or show an inverted golden hook, suggests the possibility of an economic slowdown or recession. The market's expectation of lower interest rates in the future is indicated by the following yields. The reason for this is investor anxiety about an increased economic slowdown. Those may be implementing central bank policies. Defensive strategies are looking to transition to higher quality bonds. Treasury bonds are among the examples. These bonds are strong enough to withstand periods of economic uncertainty. Contrastingly, investors with fixed income desire make sure to hold off on interest rates until they drop further. Investors who are unsure if they can afford it or want to avoid interest rate risk may be concerned about the decline in yields. Consider using floating rate notes for short-term use. The Federal Reserve has been resetting interest rates frequently since the start of the year. Investor sentiment will become less sensitive to interest rate changes as a result. Nice financial stocks, Nasdaq bank stocks, and nice brokers, trader indices both showed significant gains, demonstrating a robust performance in the financial arena and a positive investment outlook. Both NBI Biotech and Amex Biotech indices saw strong improvement. Investors' confidence in the biotech and healthcare sectors has increased following COVID. This is all due to innovation and changes in financial regulation for ESG. The WH Clean Energy Environmental Technology indices have shown impressive gains, while global alternative energy has a slight decline. This could reflect increased focus on clean energy and technology solutions. Though market segmentation may cause different performance, the Dow Jones Transportation is experiencing a surge, shows the presence of strong economic activity. The transportation industry is strongly linked to economic growth, as demonstrated by the model. However, the AI model report contained the Baltic Dry Index. The performance of dry and bulk cargo in terms of freight and profit is not consistent. The dimensions of cargo transported by the same ship have a significant difference in size, manifests variations in demand for goods that are transported. Next time, we will discuss it if you are interested. Here is where the video of this lecture ends. If there is any topic that piques your interest, kindly leave a message below. At the conclusion of this episode, I want to express my gratitude to all the viewers for their support. Producing a video is not an easy task. It is dependent on everyone's interaction and encouragement. This video uses AI models and rigorous statistical analysis to provide the video content above. Please don't forget to give today's video a thumbs up if you find it helpful, to help you search in the future when you want to watch it. I want to express my gratitude for your attention. Thank you. Thank you.